As the S&P 500 and NASDAQ are bouncing off the 200-period moving average, is Trump in the White House trying to engineer a recession? Now, we come over and look at the fear and greed index. We are still in extreme fear. However, we are inching closer over into fear. And most of the time you hear fear, you think it's bad. But in this case, since we've been a lot lower, that would actually be a welcoming sign. Now, the previous close was 19. We're coming in at a reading of 22. Now, as we look at the indices across the board, the Dow was up 485 points. The NASDAQ was up 267 points. S&P 500 up 64 points, and the Russell 2000 up 2.09. Now, when we look at advancing issues versus declining, we had 71.2% of issues advancing on the day. And then as we come over and look at the sectors across the board, almost every single sector was in the green. The only two red sectors out there were utilities, followed by energy. And speaking of energy, we come over and look at crude oil being able to spike below this consolidation low. Now the question is, are there going to be any buyers down there, or is crude going to continue to go lower and lower, which for us, the consumer at the pumps, would be a very welcoming sign. Now, if we look at this article right here, is the White House trying to engineer a recession? This Wall Street Pro explains the vision. Now we can see right here, traders are starting to price in the possibility of a US economy might fall into a recession. And we've already heard Trump in the past talk about he wants to see interest rates lower. It costs way too much to service the debt, and it's also slowing down the economy. So if indeed we do fall into a recession, then guess what? That is essentially going to go ahead and force the Fed to start aggressively cutting rates. Look right here, right now, we're seeing the first rate cut being priced in June, and then another rate cut in September, and another one in December. And again, as interest rates fall, it's not because everything is fine out there in the economy. It's because we have troubles brewing up ahead. Today, we had some economic data come out where private employers added just 77,000 jobs in the month of February, far below expectation, ADP says. Now, when we come over and actually look at that news, we can see that the market was pricing in 144,000 jobs to be added. Previously, we added 186,000 by this survey, and we came in at a measly 77K. Now, this is going to be a problem for more than one reason, not just because this was a bad reading, but what does that mean out here for Friday? Keep in mind, Friday, we had the non-farm employment numbers coming out. We're going to get what the unemployment rate is. However, tomorrow, this is going to be something that's going to be overlooked by a lot of traders out here. And that's going to be the fact that not only do we get the weekly unemployment claims coming out, and we'll see, do we get another hot reading once again? The market's priced in 234,000. The previous reading was 242,000. However, what a lot of traders are going to miss is the fact that the ECB has their monetary policy statement, and that basically is the same thing as our FOMC statement. Now, the reason why I bring this up, you might say, Mike, I trade the S&P, I trade the NASDAQ. How is that going to affect me? Well, I want you guys to think about it like this. Take a look at a chart of the dollar index. The euro is the highest weighting of the dollar index. So if the euro dollar gets extremely strong tomorrow, we're probably going to see the dollar even crater even lower. And with a lower dollar, normally that is favoring the bulls in the market. However, what if they come out tomorrow and it actually shows the euro is going to get a lot weaker? That would put more strength under the dollar, which could cause a little bit more volatility out here for us. Now, let me know in the comment section down below, do you guys also agree the White House is trying to engineer a recession like we just talked about? Because if we come right over here to poly markets and we look what they are having to say, they see a 39% chance the US is going to be in a recession in 2025. So it's going to be interesting. How do you guys align with this topic? Now, once again, today we saw a late day push up. You can see the S&P 500 bottoming out right between 11:30 and 12 o'clock, rallying up going into the close. And part of the reason for that was the White House announces 1-month tariff delay for the automakers following the USMCA agreement. So again, they get a little bit more time to basically digest and see how they want to work things out. So what does this mean for the market moving forward? Well, let's come on and take a look at the precious metal gold real quick. As the dollar's been falling, we see gold. I would expect gold to be up higher than where it was today. Gold basically closed in with a little bit of a doji-ish looking candle, a little bit of a long wick on the bottom, a little bit of a wick on the top. MACD indicator still not looking favorable for the gold at this moment. Then we jump over and look at the Dow Jones real quick. Dow Jones basically getting a bullish engulfing candle, not quite making it up here, filling the gap just yet. We look at the Russell 2000, Also trying to reject off of this low area. However, with the Russell 2000, we do have an ABC pattern completion down here at 200.34. Now, I want to remind you guys right now, Take Profit Traders having a 30% sale off all their evaluation accounts. And as a bonus, no activation fees. So you pass the account, boom, you're automatically into a funded account with no additional data fees. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Epitome. But as we jump over and start looking at the S&P 500, notice we have that massive bullish engulfing candle. However, when we look down here at the MACD indicator, still no signs of firming up on the daily chart just yet. And we do have an ABC pattern completing down here at about 566.59, right within this high volume area on the profile. So we're going to see, is there more selling to come in this market? We look over here at the 4-hour chart, MACD indicator now just starting to get a little bit of a curl effect on the way up. Then as we start looking at the 30-minute chart, MACD is looking extremely strong at this moment. I like roughly a 45-degree angle all the way up, good separation of the two lines. Now the question is, can we get a little bit of a pullback before we break up and now? Or are we going to come all the way back down? And again, this would set up a lower level consolidation. As we jump over and take a look at the futures markets real quick, what do we got going on? Well, here would be low number one. Here's low number two. So we essentially have what could be a double bottom pattern forming out here on the 4-hour chart. Now, if we look at where this pattern would actually terminate, that gives us a price completion up here about 6,004, which is a little bit above this high volume area up here on the profile. Now, in order for that pattern to be validated, we must break above 58.75. That would validate that pattern. Then as we come over and start looking at the daily profiles real quick, notice we had that good push up today right off that S1 pivot. However, some areas I'm going to be watching for tonight and maybe even early tomorrow is going to be this minus development area within the profile. And that's going to be anywhere from the ballpark of 58.32 up here to about 58.45. Can we come back in and spend a little bit more time in that area? And if you notice, the point of control is roughly right where we're at right now. Today's point of control comes in at 58.52.50. The value area high is going to be 58.65.00 with value area low being down here at 57.93.00. So one of the things I want to look at is if that double bottom is going to be in play, I really want to start to focus. Okay, how can I get an early entry into that? The market wants to give us a favorable entry. We come all the way down below value area low and then pop back up. However, I don't think we're likely going to come all the way down there before we start pushing our way back up. Keep in mind, we still have this untested value area low at about 5906.50. So again, that's going to be a target location to the upside. We also right up here at 59.56 have an untested point of control as well. So we're going to see, has enough selling been done to go ahead and get a turn out here in the markets? Next, we jump over and take a look at the QQQs. Yesterday's spinning top type of candle. Today we wicked down. However, we're able to come right back up on the daily chart. MACD indicator starting to get a little bit of a curl effect down at these lower levels. 4-hour chart, you can see that curl effect already starting to take place. We don't quite have the bullish cross just yet. And one of the targets to the upside would be up here about 514.86, right around this high volume node on the profile. The next area about 522.13. As we jump over and look at the 30-minute chart real quick, good separation of the MACD lines. I really like how this is actually setting up. Now, the question is, can we break and hold above this area? I would prefer to see a little bit of a pullback and then run up, get a little bit of an ABC pattern on the way up. And I know what you're saying. Well, Mike, we already have an ABC pattern on the way up, and you would be correct. A to B equals C to D. That's a price projection of about 507.29. But I'd also like to see an ABC pattern within an ABC pattern where we start to pull back a little bit, and then we set up a much larger move up even higher. Now, as we come over and start looking at the futures markets real quick, notice on the 4-hour chart, what do we got going on? We're spending a lot of time down here at these lower levels. And you can see, once again, we are able to come back up towards this high volume node. However, is this time different? Are we going to break and run up? Unlike the S&P 500, we do not have a double bottom pattern at this moment. And one of the targets to the upside, just looking at the 4-hour chart with the composite profile, I do want to focus on is going to be up here about 21,157. And that's essentially going to be that high volume node on the profile. As we come over and start looking at the daily profiles real quick, what do we got going on? Well, here's an ABC pattern that we talked about today on the live stream. And if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. We're going to be giving away a 50K Take Profit Trader account either on Thursday or Friday of this week's live stream. So you want to make sure that you're there for a chance to win. Now, as we look at the volume profile levels, we can see that value area high is going to come in at a price point of 20,588 and a quarter. Point of control will be down here about 20,417.75 with value area low coming in at 20,313.75. Now, could we get a little bit of a pullback again and then start to push up? Keep in mind, this untested point of control up here has my attention, 20,936, along with that ABC pattern right now at 20,869. However, if we were to pull a fib from the low out here today up here to the recent high that we had this afternoon, and we just theorize real quick and say, all right, can we potentially get a pullback all the way down towards the 50% retracement? If we were to do so, that would essentially give us a price projection about 20,981, which is slightly above that point of control. However, if we pull all the way back towards the 61.8, notice now we have a lot of areas lining up roughly in the same area. We have the larger ABC pattern up here at 869. Then we'd have this other ABC pattern right now that could be about to form. And then we also have that point of control at 936.00. Now, if you guys would like to learn the difference between a Take Profit Trader Pro account versus a Pro Plus, then make sure to watch this next video right here.